Welcome back. You're watching The Market. Well, more on the financial space. And today we're going to talk about Muthoot Microfin as well. Why are we doing that? Because Greater Pacific Capital has invested about $50 million. It's a 14% stake buyout in Muthoot Microfin by Greater Pacific. Joining us is the top management. We're now being joined by the Chief Executive Officer, Sadaf Sayeed. Thank you so much for joining us here live on this edition of The Market. Tell us more about this deal with Greater Pacific. They get a 14% stake. It's one of the largest capital infusions that you're seeing in microfinance. So tell us more about it. How do you plan to use the funds and what's the game plan?
Everyone, thank you for inviting me here. This is one of the largest investment that has happened in a microfinance entity in past couple of years since the pandemic broke. $50 million, which is around 375 crores, is a large amount of capital for a microfinance entity. And this is entirely primary infusion that GPC has done in Muthoot Microfin. Past couple of years, as you know, has been tough for the entire industry. And this is a vote of confidence in the sustainable model of microfinance and the resilience of microfinance business and the industry. And this capital would be used for further growth. We have plans to grow our portfolio. Last year, the growth was a little bit muted. We grew about 9%. But this year, our plans are to grow by 25%. Our current AUM is around 5,200 crore. We want to take it to around 6,200 crore. So this capital will definitely help us leverage, borrow more, and grow business.
So you're looking, that's quite a large, significant increase in the assets under management. How are you going to plan to go about doing that? And also, if you could throw some color on what this capital infusion is going to mean for your capital adequacy ratio. That's something the markets always want to watch out for.
Yeah, absolutely. We were anyway very well capitalized as an entity. We had a capital adequacy before the infusion of this round was around 22%. With this capital infusion, our capital adequacy increases to around 30%, slightly above 30%. So from a capital adequacy point of view, we are pretty comfortable. And in terms of growth, see, the growth and the demand in the industry is there. The demand from a rural economy is there, and we will be opening more branches. In next couple of years, we would be opening around 500 more branches. As of now, we stand at around 829 branches across 16 states across India, starting from south to north to east and west. We would be opening more branches. There will be deeper penetration in existing branches, and further we'll be adding around 500 more branches in next 2 years. So the growth will come from there. The demand is there in the rural economy. People are more aspirational. They want to do their businesses, meet their cash flow needs. So definitely Muthoot Microfin is well placed to cater to the needs of rural economy and the rural borrowers.
All right. Sadaf, I just want to ask a little bit more about that demand scenario. And just to get a sense, these new branches that you're planning, will it change the kind of geographical spread that you currently have? And what's the plan as far as the extent to which you want your reach to go?
Yeah, I think that's a good question. As far as the geographical reach is concerned, I think we are present in all critical states, around 16 states. We may add one or more states. Maybe we'll go to Uttarakhand, and the larger, I think, growth will come with deeper penetration in geographies which have more unbanked population like UP, Bihar, Chhattisgarh, Jharkhand, Rajasthan, Haryana. So we will look at a deeper penetration from those markets, and we would obviously do our existing markets like Kerala, Tamil Nadu, Karnataka. We will have our existing customer offering wider range of products, giving better services. So that we will do. Rural economy, as you know, is very resilient, and it bounced back much faster than the urban economy post the COVID wave 1 as well as COVID wave 2. COVID wave 2 was a little bit more severe in rural pocket as compared to COVID wave 1. But even then, the economy has rebounded very fast. The monsoons have been great. The rainfall was decent, so the crop would be fine. Even the crop of winter would also be good because the reservoirs are completely full. So we feel that rural economy would have decent cash flows, and the markets that we are talking about will have certain elections coming in, the UP especially, and the elections, when they are there, then there is even more money pumped into the market. So the cash flows of the rural economy would be good in near future and in medium to short term. And in the long run, we feel that the economy has become very resilient over the period of time, and they are easily able to absorb such shocks and move forward.
Talk to us about the collection efficiency that you have currently. You're saying that things have gotten much better in terms of how things are looking right now. And I'm also curious in terms of your borrowers, if you can splice that for me and tell me how many of them are engaged in agricultural activities.
Yeah, ours is a predominantly rural focused microfinance company. So we have 90% of our branches in rural area. So large amount of our borrowers are in agricultural activity. Almost around 65% of our borrowers are in direct agri, so which is including dairy business, agriculture, cattle rearing, and all those activities. As far as collections is concerned, I think I like to break that into two parts. The collection during COVID wave 1 and COVID wave 2. So in both terms, the collection was affected because of lockdown more than the creditworthiness of the borrowers or the cash flow of the borrowers. In the first lockdown, it was an unprecedented event. Nobody was prepared for it. And it was a much longer and a kind of a lockdown pan-India. So it had impacted the entire industry very hard. So the collection became kind of almost 2% from where it was 99% prior to that. But it was only because of a very harsh lockdown. Then slowly, gradually, when the market opened up, the collection moved up. And by June, it was around 54% last year. And then subsequently, it went to around 96% in March. This time around, I think lockdown has been a little bit more systematic. It was not a uniform lockdown all across. It was a more state-driven lockdown. So the collection was a lot better. So when the second lockdown happened, initially the collection went down, but as compared to last time where the collection went down to 2%, this time it was only 54%. But it has bounced back even faster. So as we speak, in November itself, we have come to around 98% collection efficiency. And I'm very confident that by March, we would be back to the 99% collection efficiency, which is expected out of a microfinance entity.
Sadaf, thank you so much for joining in, and look forward to speaking to you once again once you've got things rolling in terms of the utilization of the funds that are coming to you now. Thanks so much for taking the time.